All right, guys, let's get started on the market analysis for today. We're going to keep it short and brief on a daily basis now. If we look at the S&P 500, nice move to the upside. If we look at a daily time frame, the downtrend is still holding on. Looking at the weekly, the downtrend is still active, right? So what we want to see here is the price action on the downtrend. The price action here is starting to see a lot more accumulation of buyers than sellers, which is a positive sentiment. Then what we want to notice is the bigger downtrend line break is at 404. So this is where I have my point of entry and my stop loss set at 398. The reason for the 398 level is I just want to keep it nice and short that we can have a fake out to this level. If market makers are really aggressive, they may fake out all the way till 396. But for now, I'll keep it around 398 because I want to keep my stops tight. If we break above 404, nice move to the upside is possible. The reason for that is we're into earnings season, and earnings seasons can really help move the market in both directions. Now, if I'm looking to take short position on the market, I understand that there's a lot of volatility in here, and I don't want to be a part of that. So what I want to see is I want to see some sort of clean break to the downside below 375 all the way down to 356. If that happens, I have my short position trigger here and my stop loss here. It's as simple as that, and that's the best way to make money, right? So if we look at the triple Qs here, triple Qs are very, very, down, and they're beaten. That's why there's a high chance that the triple Qs may have bottomed out. If we look at the Qs and we look at the overall price, they went low as 37%. Right, that's how low the Qs went from their all-time highs. That's a big correction to the downside, and usually that does indicate some sort of a technical bottom on the Qs, but that doesn't say that they won't go lower. If it does go down to the pre-COVID highs, we're looking at a max pain of about, from the highs, 41%, and from here, from this low, would be another 4% move to the downside, right? But from here, it would be a significant move where the market is currently sitting, another 17.5% move to the downside. But you know what? We will keep an eye on that. But if we were to take a long position on the Qs, I am comfortable taking a long position on the Qs right about here. And my target would be up here, stop loss tight, nice and tight, right between there. I've talked about this purple level. I'll go into the smaller time frame. If we look at this level, right, and we really try to understand it, every time market went to this price or the stock went to this price, the index, there was massive sell-offs. So buyers really have to build up and be strong and believe in the tech sector. The tech sector has been the hardest hit. There's been massive layoffs in the sector. So we have to be mindful of that starting tomorrow with Microsoft earnings, there could be a lot of catalysts that tech sector may go up or it may come back down. So we have to be careful. Let's not speculate. Let's let the market tell us how it's going to read the news. All right, so looking at that, looking at IWM now. IWM, nice in this level, multiple tests here, consolidating again to the upside. If we get a break of 189, IWM will be a very nice play to 192, and then possibly a push up to 201, which could be very, very prevalent here. What we're going to do is we're going to adjust this trend line just a little bit to the downside, and we'll see how this holds up for us, if this is a nice support level. But overall, if I'm going to play a downside break on IWM, it probably won't be until this level breaks at 170, and then a nice break, push down to 165. If that breaks, then I'll go lower, but keep your levels a little bit wider because there's a lot of volatility at play here. Looking at gold here, okay, gold, this has been my level, and I've tracked this for a long time now. If you guys follow me, I have been talking about this. Gold is very decent here, okay? Gold is consolidating above the highs here. Stop loss is all the way at 171 on gold. If we look at the weekly time frame on gold, a cup and handle pattern, all right, and we see a lot of buying pressure or a lot of green in gold on the weekly time frame. If we zoom into the daily, more green than red, especially on this up move. So we can have a pullback or we can have a small retracement on gold, very, very likely. But so far, gold is very, very bullish right now, and I expect to see 190, 191 on gold very, very soon. Now, if we look at the overall market today here on the indexes and the sectors on the right, and I've said this multiple times again, and this is my mantra, I stick to it. When everything is green or when everything is red, I don't like to play, and I don't like to take too many trades. So once again, today we have every single sector today is green. And the biggest leader we had was semiconductors, which is great, which is trying to bounce off. And this is an inverted head and shoulders on the semiconductors here, which it looks like it broke through here. Now, semiconductors couldn't break out to the upside at 247 is defeated on SMH. We can talk about a big bullish move to the upside is highly possible. Okay, this is on semiconductors. So this is something that we want to pay attention to. And then we also have the retail ETF, which bounced. But if we look at it, could this be a double bottom or even a triple bottom, so to say, or even an inverted head and shoulders on retail ETF is very possible. But we will continue to monitor this. But I do want to see commodities get hit harder. I want to see energies get hit harder. I want to see utilities get hit harder. They're not hit as hard, and they're consolidating, and that is worrisome to me. That this every single sector is green, and we're not seeing rotation. But this is my analysis for today. I'll see you guys tomorrow, and we'll talk about what happened with Microsoft.